Well, we've made it to July 2022, Keith. It's July the 1st. Happy July,
Thank you.
weekend of 4th of July. It's been a quieter week, less dramatic on the stock markets at least. Lots still of stories of collapsing crypto. Any generalizations about this week, the week that just happened, the week that ended on Friday, July 1st, from a tech financial point of view?
Painful, I'd say still. I mean, anyone that is in any kind of a market is reeling with indecision, confusion, fear. That there isn't a whole lot of optimism out there.
That makes me cheerful because I'm only comfortable when things are really bad. Is
Yeah.
this the darkness before dawn, or is it a genuine middle of the night situation, do you think?
Well, markets are essentially psychology tests more than anything. So, no psychology lasts forever. So my guess is at some point, greedy people start buying things cheap, and then we get an adjustment on the other side, and then we'll see. There are fundamentals always. Fundamentals are definitely not good. So, you know, psychology is not particularly driven by fundamentals, but more by fear of fundamentals. So I think there's a mismatch between the fundamentals and the fear. Fear is overdone, but I don't think it'll correct quickly or easily because there's so many key drivers. Probably the best thing that's happened this week, and I will eat humble pie here, is that the January 6th committee combined with the signing in of the gun bill last week and the Democrats' commitment to legislating on abortion have all led to the Democrats suddenly being ahead in the opinion polls for November. That probably is optimism for the market because the markets hate change.
Yeah, I mean, I I didn't see that. Where'd you see that about the Democrats being ahead?
I watch Meet the Press, so this is last Sunday's polls. So they
Yeah, I mean, the latest poll I saw is in a head-to-head Biden, DeSantis, Trump. Trump wins. I mean, I still think Trump's the favorite, and I don't think the January 6th stuff changes anything.
Well, I didn't think it would, but I must admit that when they got, I can't remember her name, but the woman who was in the White House observing
Yeah.
everything, and suddenly it becomes incredibly hard for even Trump's loyalist backers to say good things about him. So I suspect that's opened a door that wasn't open before. But who knows? I mean, I'm no politician, so we'll see.
Yeah, and we've heard that so many times before. You can't remember her name. I can't remember her name. I think next week nobody can remember her name.
Yeah.
I mean, the reality, I think, in America, and I don't know how this affects the markets, but a significant proportion of Americans have given up on democracy. They just don't care one way or the other. It doesn't make any difference. The system doesn't work very well anyway at the best of times.
Yeah.
So when you have people like Trump and particularly Bannon, I did a show, a keen-on show recently with um, Jennifer Senora, very very good Atlantic journalist. She just won the Pulitzer Prize. She followed Bannon, and basically she wrote this piece in the Atlantic called "America's Rasputin." I mean, what she says, and what's increasingly becoming clear, and I think it's also true of Thiel, is these people are brazenly indifferent to democracy. If anything, brazenly hostile. So
Well,
I don't know. I mean, maybe from some investors' point of view, that's not necessarily a bad thing because if you do away with democracy, you have less political turbulence if you do it successfully. Although I don't think that's likely either.
I think Luna, what are you doing? My dog wants to go out of my office. Let me just let her. There we go. She was happily sleeping there until you started mentioning Bannon, and then she woke up. Look, I think democracy is a complicated subject because there's a lot of things going on. I think the key driver is cynicism which translates into lack of engagement, and that's been going on for a long time. And that gives a lot of freedom to anti-democrats to do things, populist things that they really don't get held accountable for. So it's the balance between, I remember Obama giving this speech the day after he was elected the first time, saying, "You, the people, need to be mobilized because I can't do anything on my own." And the fact is, people are not mobilized. They are.
Right. I mean, Biden is such an astonishingly pathetic character. I mean, he's about 30 years past his shelf life. I think the reality in America is it's like a bad marriage, a really bad marriage. You have to try something else. It can't last forever. And what needs to happen in America is they need to experience a period without democracy and see what it's like. I mean, for most Americans, I don't think they really care. It doesn't make any difference. It might make the government more efficient, more accountable. I mean,
Yeah.
the fact that democracies aren't necessarily more accountable or transparent. So we'll see. But I think it would be just as when you have friends in really bad marriages, you have to say to them eventually, you just need to get out of this. Whatever arguments you make for staying in about the kids or finance or whatever it is, just move on.
At root, I'm more of an economist than a politician, and I tend to think that economics creates politics, and so my framing for the whole thing, which is heavily dominated by my familiarity with British history, is that America is in terminal economic relative decline, not absolute, but relative.
Mm.
There's a couple of stories in the news this week about China innovating in tech, and those are just the tip of the iceberg. And I think it's very hard for politics to be optimistic when economics is in decline. And so you get this mismatch. And Britain took, decades to come to terms with its own.
It still hasn't come to terms. I mean, that's been the perpetual story. I did an interview this week with a geostrategic thinker, Peter Zeihan. He's a pretty interesting guy. He's written a book called The End of the World is Just the Beginning. And he's made some interesting predictions. He sees Mexico, he doesn't believe that China is a particularly compelling long-term economic bet. He sees Mexico as the next China. But from your point of view, what's kind of interesting is he sees the end of venture capital in a generational sense. He thinks, and I don't entirely understand what he was saying, but he argued in an interview, the Keenon interview with Zeihan, that the dying out of the boomer generation would also ultimately kill venture capital because it will do away with all the extra capital. So I can't comment. I don't know enough about it, but it's an interesting argument.
Yeah, I would need to read him, but my superficial gut reaction is that can't happen because venture capital doesn't come from individual wealth. Venture capital comes from collective wealth.
But it comes from an economy which is able to generate those funds for investment. I mean, there's nothing inevitable about billions of dollars always being channeled into investment.
But you know where that comes from, Andrew? You and I don't
pension funds, yeah,
exactly. So we don't probably pay pensions, but most people do, and it's lots of small people paying small amounts weekly.
They all lost their money in crypto. So yeah, it's an interesting situation. I think eventually, though, in America, something has to break, but that's a longer term thing. You're leading this week, Keith, with the most un-American thing. The next streaming war is bidding war for Champions League football.
Well, that's just an example. It's way broader than that. It's we've seen movies moving to streaming. We've now seen high quality TV series moving to streaming. What we haven't seen so far is news and live sports moving to streaming, and that's those are compelling
Except for
thing.
this show and Now TV and Keen On. I mean, there's a lot of stuff streaming.
That's a lot of stuff streaming. But Amazon this week, along with BT Sport, which is itself satellite delivered and cable delivered, shared the rights to the Champions League soccer in the UK. So the biggest competition in the biggest market, a big chunk of it's going to Amazon. We've already seen here in the US Apple buying baseball rights and Major League Soccer rights, and it's rumored Sunday ticket rights. We've also seen this week more minor stuff, but a bunch of college football teams in America have left the Pac 12 league and joined the Big Ten league. Why? Because players can now get paid, and there's lots of television money in having a good league. And streaming is almost certainly going to play a role there. And, you know, when Apple and Amazon have got such big bank accounts compared to the broadcasters and the cable networks, I think we can see where this is going.
So and you lay it out in an interesting way in the newsletter. What two questions which are connected. Why would Amazon and Apple, I mean, they got a lot of money, lots of opportunity. They have to spend it on something, but there's this could be the many other things they could spend their money on. What attracts them to this market? And secondly, what is their business model? How do they make money out of streaming the Champions League in the UK? Who pays who?
Well, firstly, Amazon pays UEFA, the organization.
No, I understand that they buy the rights.
Well,
that's the easy bit. But then how do they make money?
Well, then punters basically buy Amazon Prime to gain access to the stream. So they grow subscribers. And Amazon has recently launched Freevee, which is an advertising-supported version of Amazon Prime, where you don't have to be an Amazon Prime member to watch it, but they show ads. And by the way, Netflix is in discussions with both Google and I think Amazon talking about who's going to deliver ads on its network. Or was it Google and Comcast? I've forgotten, but there was two people. So we're seeing the rise of advertising-supported streams and subscriber-supported streams. So what do you need? Compelling reasons to subscribe. And it's got to be more than if it's a binge-watch 10-part season, what people are doing is they're subscribing at the start of the month and unsubscribing at the end of the month after they've binge-watched. With the Champions League, you've got 9 months worth of reasons to subscribe.
But what's the difference? I subscribe to Peacock and one or two of the other services, depending which European competition Tottenham happen to find themselves in. What's the difference between that and these new streaming deals?
Actually, that's the same. I think Peacock's exactly the same. But I would predict that Peacock will not keep those rights. I think eventually the biggest checkbook, and that's what's in the editorial. What I do in the editorial is explain that the price currently being paid for these sports is way less than the value. In fact, the leagues are giving away billions and billions of dollars to the rights buyers. And I do the analysis on the English Premier League to show that the actual value of the English Premier League annually is almost 10 times more than they sell it for.
But then there was also another interesting story. I don't know if you included it. I don't think you did. That Barcelona have sold some of their media rights to a US investor.
Yep. Yeah, that's quite specific to the Spanish league. In the Spanish league, there are TV rights that exclude Real Madrid and Barcelona. They retain the rights themselves. And they were strong enough not to allow the league to take those rights over. So now they can sell their rights directly to a third party at the team level, not the league level. And they've sold 25% of, I can't remember if it's 10 years, I think it's 10 years worth of rights for 25% of the rights in order to put 700 million euros in the bank because they were legally bankrupt. They needed to.
So all these deals, do you think that they strengthen the current infrastructure of, say, there being a Spanish and a German and an English league, or they lend themselves to more change, more radical, disruptive change, so that there's eventually a pan-European league or even a global league?
Well, I think the power is in whoever can attract the audience. And that clearly is the teams, not the leagues.
Right.
So the teams are more important than the
So
leagues.
all this does is compound the inequalities. So Barcelona or Madrid can do separate deals with media companies nationally or internationally. They get even richer, even more powerful than the smaller Spanish clubs. And the same is true in the UK. I mean, it seems to me as if the big confrontation in the UK is between the big six who obviously want to generate more revenue independently, and the smaller clubs who make up the top division who
Yeah,
jump in and out of the division, the Crystal Palaces and the Leicesters of the world.
yeah. Well, you know what this really tells us is a little bit like when Alta Vista was the best search engine, and everyone said, "Well, search is done," and then suddenly Google came along with a much better mousetrap. What it really tells us is streaming is nowhere near even the beginning. I use this concept of digital seats, where I say, well, how many people would watch the Premier League every week if they could get a seat, in the quote stadium, the digital stadium? And in the case of the big teams, it's hundreds of millions of
But they
people.
can do that already with television.
Yeah, but they don't get the money. The money goes to the TV stations, and the leagues only take a small fraction of it. So I actually would like to see the leagues win, not the teams. I think the best outcome would be the leagues win. But for the leagues to win, they have to own the digital seats. Therefore, they have to start building direct streaming services, global streaming services that don't need middlemen. And that is something they're not used to doing. The teams are doing that. I don't know what Tottenham has, but Manchester United has MUTV, and it's a very good channel. And they have the expertise now to do almost anything. They've been doing lesser teams like the women's team and the junior team for years now on live streaming globally. So they're clearly capable of doing it. The only way that you end up with a good outcome here is if the leagues step up to the plate, earn the money that the game, deserves, and use that money for the betterment of the game at all levels. And that means you need an ambitious league that's savvy, tech savvy, and business savvy, which we don't have. So most likely, Amazon and Apple will end up making more money than the leagues.
Yeah, and this will only extend with other sporting events, the Olympics. The World Cup in Qatar is going to be a standard television event. It's not going to. None of the big players, none of the big digital players have bought the rights. I mean, that in exclusively, right? Amazon or Apple.
Yeah, I don't think I think they're behind the curve. I think anything large, NBC has pre-negotiated for n years ahead anyway, and so it's just like Barcelona sold its rights for 10 years, 25%. The Olympics have sold their rights, for one or two Olympics. So you can only really get in the game once those contracts come to an end, and you need to start bidding, at the appropriate time. And if you go back to when those bids happened, Amazon and Apple weren't ready to bid. So,
Well, like last week and the week before, you divide the newsletter into good and bad news, neither of which seem particularly good or bad. What is the most interesting bit of good news this week that suggests maybe the worst is over?
I don't think any of the news suggests the worst is over. The good news suggests that there are plenty of people who understand that now is a good time to start investing due to prices being low, and that includes Sequoia, Entrepreneur First, which is a really good UK-based program, Plural, which is also UK-based. It's the founder of TransferWise and three other entrepreneurs pooling together to compete for early-stage funding there. The Long-Term Stock Exchange here, which is a really good initiative written by the guy who wrote the book about the, what was it, the 4-hour week or something.
Tim Ferriss.
Tim Ferriss is involved in that. And
Wow.
So the good news is really lots of bits of good news within the bad. It doesn't really suggest a trend towards good. yet, I would say. The essays of the week are a bit more interesting.
Yeah, well, the Web3 use case, that was the one I suggested. I mean, it does. I mean, you might disagree, but it does suggest, I've been saying this a while, that it's still not clear why anyone would want Web3. Crypto, I mean, NFT isn't even a Web3 application, but all this stuff is just so unconvincing.
Yeah, this is from The Atlantic, which I increasingly think is a really good publication. And this is a story about how empty of substance the Web3 supporters are, including someone I'm a fan of, Packy McCormick.
Yeah, you're always bringing him up.
Yeah, I like him, but apparently in this interview, he gave an example of Web3 in the context of mortgages, and at the end acknowledged that it was a bad example because he didn't know what he was talking about, which anyone can do. As you know, I often don't know what I'm talking about. So,
Mostly. Me either.
I don't want to blame him for that. But and Mark Andreessen is called out as well. And I think it's characteristic of early innovation. I remember being asked why the internet was important back in 1994 when I was doing EasyNet. And I'm sure my answers were rubbish because the truth is at the start of something, you really don't know. You're guessing.
Well, you don't know, but back in, I was doing this in the mid 90s. It was obvious that it had value. It's still not clear to me what the value of crypto is. I just don't get it. I just do not understand. Apart from it being a speculative, I understand the speculative mania part of it, but most of the arguments seem so unconvincing.
I don't start with crypto at all. It's interesting. I'm an investor in a company called Giftcoin Card, which basically lets you create gift cards spendable at any retailer and use your crypto wallet as a source of funds. Meaning that if crypto is going up and I send my kid $10, by the time he spends it, it might be worth $15.
Yeah, but that's the reverse is also possible.
Yeah,
that's exactly the kind of application which I see no value because we
well,
already have bank accounts. We already have cash that does that perfectly adequately.
Well, wait, you'd be surprised to hear. I don't think it's important to use the word crypto in that context. To me, the word crypto actually gets in the way of understanding why the trend to Web3 is important. And the word blockchain almost gets in the way as well. It's really more to do with the current economy. And if you start there, if you start by saying, well, how much value is sucked out of the current economy due to the manual people and processes and institutions in between you and me whenever we do anything. If we buy a house, if we buy a car, if we want to get money to go abroad, how many people are in between us taking a piece of the value? And is it possible that we could build a software foundation that took the cost out whilst keeping the trust and the efficiency and making it a better experience?
Well, that's not Web3. That could be anything. I agree, but that's what the internet is. Going to Amazon rather than having to go to a store, sending an email. That's a given.
You could argue, I'll be careful here because I want to think through whether I already believe this, but you could argue the internet created more middlemen.
More what?
Middlemen. And the next leap couldn't have happened before. Allows software automation is really what it's about. The buzzword is smart contracts and DAOs, but it's really software automation with human oversight.
Well, I buy that. Maybe there's some truth in that. But again, I don't know why that's Web3. That's just smart software. It's AI. Well, it's interesting. This won't go away. That we could argue it's good or bad news. Any particularly worrying bad news, Keith?
I think lots of layoffs are happening. That's a big part of the bad
including news. A huge 13-person job cut at Substack. That must have had a dramatic impact on the world stock market.
Yeah, it kind of opened up the conspiracy theories to me because that story, which really doesn't deserve any headlines at all, because Substack is doing what it should be doing, which is cutting costs during a bad time. But actually, it was promoted heavily by the New York Times. And the New York Times has a bit of a vendetta against Substack anyway, for obvious reasons. And I think it was a hatchet job against Substack. Substack's doing a great job. There's a new feature in my newsletter this week where Substack encouraged me to read my editorial out loud, and they recorded me doing it. And they put it at the top of the newsletter, meaning somebody can be in the gym listening to me speaking my editorial instead of reading it.
Well, they've got the video feature too, yeah.
Yeah, so they're doing quite well. So I agree with you that I put it in the bad news section almost as a joke to the New York.
The real issue is whether this slowdown is going to successfully tame inflation. If it doesn't, then there's a huge problem, right?
Well, I think it's going to be hard to tame inflation as long as the supply chains are not providing supply to demand. Basically, there's more demand than supply, and so prices go up. I don't think it's got anything to do with unfulfilled demand doesn't get fixed by the money supply changing.
Well, you may be right on this disintermediation. Your startup of the week seems to be one of these that makes companies a little, not just more efficient, but perhaps even fairer. Perhaps you might talk about the startup of the week, Keith.
Yeah. This is Pave, and I noticed it because it claims that it's going to help HR departments analyze gaps in pay and equity from a diversity point of view. And we all know, we've all seen unfair distributions of payment and equity in companies that somehow or other ends up reflecting women get paid less, people of color get paid less and are not promoted as often. And, the idea that is accidental, this company says, well, we can fix that. And in the current climate where we all want people to be treated fairly, I think for the most part, it's become a very popular company with HR departments and CFOs, and is now valued at a 1.6 billion. It's one of the new unicorns in this post-correction era. There were 35 new unicorns in May. This is one of them.
Well, that's good. It seems to make sense. Although the software, I wonder whether there'll be questions on privacy with this software, HR data. Does that mean that everyone has to reveal who they are, their gender, their sex, their?
I think that's optional.
Color?
I think that's optional, but to the extent that it is on the record in the database, the software can then judge whether anyone's being underpaid relative to their.
Here where I see it, here's where blockchain can be very valuable. If this is transparent and people can actually see it, and they can be confident that the company they're working for actually is not biased against one group or other, I think that has very significant value.
Yeah.
And then finally, Keith, tweet of the week.
Tweet of the week. One. Yeah, tweet of the week comes from, and I just noticed my screen share has stopped, so I'm going to have to.
Dan Primack.
You're going to have to restart that. Here we go. Tweet of the week this week is Dan Primack, or is it Primack or Primack?
I don't know.
Well, Dan, our good friend Dan, quoting CNBC, reported that FTX, which is a crypto exchange like Coinbase or Binance, it's the latest leader actually in that market. It's the biggest of the three now. Is going to buy BlockFi, which raised 1.2 billion over its life, for 25 million. Now, actually today, the actual news was reported, and it's closer to 10 times that, 240 million. And it's an option, not an actual buyout. So Dan was a bit fast on the keyboard.
That's wrong.
So it's wrong, but it's still directionally correct that the price being paid is a lot less than the money raised, and usually you expect the opposite to be true. So it is symptomatic of bargain basement deals getting done in the land of
Yeah, and
crypto.
the real question with these crypto exchanges is whether they're all just going to go belly up. Celsius is one that's a particularly interesting one. I mean,
Well,
what's so valuable? Why is FTX doing better than the others? Where's the value in FTX?
FTX is doing zero cost trading. So a bit like E-Trade did back in the day for stocks. So they're probably making their money on the delta between the bid and the ask. And it's growing very, very fast and is backed. Now, an exchange, if you think of the NASDAQ, it relies on the underlying companies being strong. An exchange can only be as strong as the ecosystem it sits on top of.
Yeah, we
So,
haven't, and the other shoe or the other shoe shop hasn't dropped yet with all this stuff. I mean, who knows how Coinbase and all these other companies are going to survive as this economy spins more and more out of control.
yeah, the funny part of it is, you know, if you think about the value of an asset in a time of inflation, uh, assets that people trust should hold their value. So what's happening here is a massive reduction in trust, leading to a reduction in value. Now, my house probably hasn't dropped in value that much because people trust that property is still worth something.
Well, it's clear what property has, what the value of. I mean, again, it comes back to this whole
Well,
issue of why crypto is not just um,
that's the
a
funny thing.
Ponzi scheme where first in has made the money and where the real value is. I just
Well,
so
think of it this way: when you, in order to get crypto, you have to spend dollars. So for every crypto that comes into a wallet, some dollars went to the seller. Or
yeah.
so the crypto is worth whatever it was paid for it until it collapses, and then and then it isn't. And now the dollars have basically been destroyed, not only the crypto.
But they've been stolen. That's like OneCoin. I mean, the thing just gets sold as a Ponzi scheme. People, the dumber and dumber people pour money in, not understanding what happens. The people, like the head of OneCoin, steal the money and disappear, and that's the end of it.
Yeah.
There's no value in that and that broader economic value except to the criminal.
Yeah. Well, that and that's true.
I mean, it's not true entirely of crypto, but this idea. I mean, like the founder of Ethereum, one of the founders of Ethereum, Gavin Wood, famously said about crypto, "We replace trust with truth." I mean, that was one of the most bogus things ever said, and journalists picked it up for some reason, but it's
Well,
absolute nonsense.
well, yeah, I think you're throwing the baby out with the bathwater, because what he means by that is a ledger can't lie. Is all he's saying. A ledger can't lie. Now, a bank ledger, somebody can fraudulently change the records, but a blockchain ledger, you can't. So ledgers don't lie. And I think it's important to distinguish between blockchains and ledgers, crypto, and then applications, products, and services.
Yeah, but all these crypto things exist on that they need applications. It's not enough just to have crypto. There has to be reasons for it, how it's used. Anyway,
Yeah. Well,
so we've been arguing this for a while. We will continue arguing it. That was the week for July 1st. Hopefully, the second half of the year, Keith, will be a bit better on the market, but we will continue to discuss through the rest of the summer. So, everyone have a happy 4th of July, and we will see you again next week on July the 8th. Keep well, everyone.
we will indeed. And keep believing in ledgers.